Mess with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, with the volatility to Bitcoin coming down to the golden pocket as we speak. And what is this also the confluence of? If this will actually load, the point of control of this previous, how many days of consolidation was that? That was 92 days point of control there. Also golden pocket of this retrace to the upside. Are we going to see a reaction bounce off the 618 region? It all depends on how this candle closes, bullish or bearish. How does the 4-hour candle close in the next 10 minutes? This is what we like to see, some action that can predict the next move thereafter. So coming down to the 0.65, 0.66 region, this is a good retrace that we like to see after rejection of the point of control and breaking of this impulse talking about yesterday, we did not really like those 786 bounces. Not my cup of tea, well, I believe were the exact words we said. So that is now broken, and we're coming down to this one. Can we hold? It looks like we're breaking 28K as we speak off this mean reversion retrace. Are we coming down to the 0.382 of this mean reversion path to the upside? Let's go ahead and take a look at the liquidity and what has been snatched and what lies in wait. Let's go ahead to the high block. What is high block capital? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss. So we get to see where those crispy characters are on all the time frames, external and internal pools. Let's start with the internal first. So with this drop to the downside, you've seen these massive shorts and longs on both sides opening up here as interest is generated at these levels. As it stands right now, you're getting huge $242 million shorts opening up here, as opposed to the 132 million and 144 million in longs. So as it stands right now, there are more shorts to longs. Also, this $253 million short pool over here at 28,869 lines up in confluence. So that's a interesting point to retrace back up to 28,869. Please mark it off in your charts. If we go into this, the reason we had that V-shaped reaction was because of this pool opening up. The 100x versions of that $253 million were snatched up without hesitation here.
Fatality.
And that's what happens when you use 100x leverage and don't pay yourself. So they came back to those guys. They round topped, induced some more 100xers in, gobbled up the 100xers, and then what did they do thereafter? They basically spiked down to get retail to FOMO in there. We were talking about a potential 15-minute cross up here. They came up, took out as many of the shorts as they could. Some $133 million pools were induced here, and then they dropped it down. There's where the $242 million pool was opened up here, right at that level, alongside 148, 96, 174. A lot of shorts opening up as we drop down there, so they are in profit as we speak. This could insinuate the bounce idea, because if we look here at the bottom, we do have these $148 million opening up, 174 million, 242, all in this region here. All you have that 144 million in longs down below, which they spiked into, and they took out all that external pool as well. What do we mean by external? Well, we have to expand our vision to the higher time frames to see that. This is the 7-day, so the 7-day, let's load it. Shout out to everyone here. Boom, boom, boom. What's up, CNC? How you doing? I had to stream Bitcoin for this move here. It was quite intense. So they ripped right through the 7-day liquidity because they're aiming at the higher time frame liquidity, and this is when you shift your vision, expand it to the external liquidity range, and they have taken out that external range here of 40 billion, I believe, was the total number that we've been going over the last few days, talking about why we didn't like this range for a long. We were saying coming back into this region was where we would be contemplating a swing play, and now we're here. So now let's contemplate it. Let's take a look at the liquidity more seriously. So you do have these, the monthly time frame imbalance has been taken out now. Now you could keep coming lower, of course, but there's a big gap from 28K. There's nothing really here on the monthly time frame for them to take, so they would most likely induce and consolidate and figure out their way here. So you have time to watch structure develop and see for some divergence play to the upside. Let's go to the expand our vision to the higher time frame of the 3-month. The 3-month does have that external liquidity range down below. We talked about the 3 and the 6-month imbalance being to the downside, and then you have all these paths being paved to the downside. Let's look at what they took. They took 63 billion off the table at 28.2. The next one is at 27.9. I believe we did go down into the 9 region. This is late to update, so they might have taken that 100 billion off too. This 42 billion at 27.9. If we go to the 2-year time frame, we could see I'm getting an alert on my phone about 7 time frames oversold right now on BTC. I'm going to screenshot that just for later. There we go. Screenshot it for later because it might be a nice point to see. We're breaking that 27,943 region. 943 has you at that 42 billion. So if we go to the 2-year time frame, let's go and run it. All right, so the 27,943, yeah, you got 56 billion. So the entire region down below, you do have pools on the external range. The most external, the 2-year time frame, you have 84 billion at 27.6, 72 billion 27.2, 54 billion 26.8, and those are the only pools before you Bart Simpson down to that 24 sub 25k, 241 billion down there. So you got 600 billion down below, 600 billion up above. We're caught in a rock in a hard place. So are they going to meander around here and get people to close their stops, their trades into profit? As it stands right now with the bull trend, the longs are paying the fees, so that's why they've been consolidating sideways, is what I reckon, because they're paying for the trades to remain open so they can take their jolly time for going to those shorts. So once again, going back to the monthly time frame, we did take out that $40 billion plus in this region. Do we continue lower? That is the question. So let's go ahead and take a look at our oscillators. We are breaking on the Coinbase chart. We are currently breaking this 0.66 point of control region, and 3 more minutes till the candle closes. I'd expect some interest to generate up here. Let's just go see what the liquidation levels on Coinbase look like. And then we'll start to turn on our indicator and go to the Binance chart. So you got a nice candle close reaction just right up on that 0.65 region, and they came back and took all those 50x. In case you're wondering what I'm looking at here, this is a liquidation levels indicator by ML application that shows you liquidation points of 100xers, 50x, and 25x. You could set the threshold to 0.1 so you can see every $100,000 trade. There's some 100xers opening up for $4 million position times 2, $8 million opening up here. So they could fuel down to that guy to take it. So when you see those guys opening up, they basically come down and they could grab those guys, and you could watch them live turn it down. So they're now turning to 6.7 million in interest there. Let's repopulate this really quick. Ooh, 6 people. Wow, nice. Thank you for coming on in, everyone. Be sure to hit that like button because it is a pretty penny to have this high block stream it to you live. So we do have this $130 million pool up here as opposed to the $74 million down below. So there is more interest in shorts than longs right now, although not to discount $144 million down at 27.64. So when you see this large pool up here, this is what you would call your fair value gap, because it gapped down, and in the process this $242 million character is open in profit. So what do they like to do? Retrace back up to that and get them to close their trade or liquidate them if they are unaware of their trade at the time. So coming back to the 28,344 region might be something to think about. Let's go back and see what, ooh, we're getting some V-shaped action on that last minute, 32 seconds. Let's go into the Binance chart, turn off this ML applications, and turn on our indicator suite, see what we can see. So they recovered this zone completely. They went the distance. We were asking in the channel, can they go to the distance? And they did. So we can remove this. There is a pool down here. This is the bearish trend-based fib levels back from this little impulse retrace idea had the math inputted to this Hail Mary play. We broke the Hail Mary and we're now basically closing candles at this 0.66 region of the retrace. 8 right through the 618. And where do we go from here? Let's go ahead and throw on our oscillators. All right, what is this little bit of happiness? Link in the description for more. This is 𝗦𝗲𝗿𝗀𝗏𝗋. Scroll down to features. This is the schematic. You can toggle switch it, see what it looks like at Bitcoin's actual bottom before we knew it was the bottom. Thanks to the rocket ships and everything, we assumed it was a bottom before it occurred, and we traced it over in preparation for this indicator. Oh, and what do you know? We're getting a rocket ship. Whoa, this is kind of cool. So we're getting, that's kind of interesting. So we're getting a rocket ship lock in here on the 4-hour time frame. Does this play out or not? This is locked in time in advance. These are leading indicators. So these kind of show you, that's where I was getting that 7 time frames that I locked in. The last one we had, I'll show you the last one we had. Let's go ahead and show you that over here. Momentum Master. The last one we had was down at 25K, and we got that alert to our phone, 7 time frames oversold, and boom, the rest was history. We went up to 30K thereafter. So that is interesting to note. It didn't get the exact bottom, but it did start to print. Now, how do these rocket ships work? Well, the more exhausted the time frame, like let's say the 6-hour in 2 hours closes with this extreme push to the downside, and it locks in that rocket ship that remains. And what do I mean by remain? Well, if you go back to the Bitcoin's actual bottom here, we had some rocket ships that remained on the 6-hour time frame at the actual bottom here before we shifted out. And sure enough, that was a clue of what was to come. Granted, you had these false takeoff ones, but they did play out to more than break even. And yeah, if you go down to lower time frames, like if we go back to here, for example, and we start to lower this to a degree here. Come on. It should populate what's going on. Oh, getting some issues here with the... I hope it's okay. The stream's all right, I hope. What's going on? Wait, what? Either way, so getting, yes, so on the 1 hour time frame, as you see here, there was a rocket ship that locked in here on the 1 hour, and it was also on the 6-hour at this push down. And so the more likelihood of something playing out is when it locks in on higher time frames. On the 1 hour, it might not be as accurate, but even if we went back to this point on the 29th, was it? Yeah, if we play this out a little bit. Yeah, so we had some more rocket ships on the 29th. This one we have timestamped. That was the actual bottom of the market, and the rocket ships played out. And they had the 31st. Yeah, we had the other one on the 31st. But those locked in leading, they're not repaints. So you saw just the one that's happening right now. So we'll see tomorrow or in a few days time, because it could be this rocket that we're seeing right now, and just, you know, weeks later that starts to play out, or a week later even. But yeah, the rest was history. You know the rest from the beginning of the year. So let's go back to where we are currently and see this rocket ship. Does it hold? We're going down to 27.8. We're doing some capitulation now, like really sticking it to the longs here. All the high leveraged people getting squeezed to kingdom come. All right, so this is the second region. So this is basically a deep retrace, so we can switch this over to deep. it negated the 618, so we don't need that up anymore. So we have the 706 and the 786 and the 886 retrace zones. And if we start to take a look here at the 4-hour time frame, it did close with that rocket ship intact, did it? I saw it just a moment ago. So sometimes when I repopulate, it does like disappear like that. So interesting to note, we did come down to the 706. This was my second area of interest. Let's go see what type of liquidity has entered thus far. Shout out to everyone here. All right, so they went and grabbed that 132 million, 94 million, all of the longs that are opening up here. There's getting even heavier shorts opening up into support, 27,893. This $251 million pool should get retraced back up to fairly V-shaped like. And yeah, this is interesting. I'm gonna screenshot this just to commemorate. Let's go into the boop and here. All right, so we're getting that rocket ship love happening. Let's see what it does. So we got basically a lot of time frames oversold. And that's why I like the rocket ship plays, because it's, you know, a decent liftoff, let's say, if it does play out. There are times, we went over 2 days ago how these sixes and these rocket ships do fail. There's nothing that is 100%. So there was a time we went to show in the past where the indicator did not succeed 100%, and we went over how the Luna liquidation event and the manipulation of that caused things to be wonky for a few weeks, or at least in the drop period of that short of the Luna liquidation event in May. We can go back and just prove that, but let's first look at what's going on right now. All right, it's been a while since it's been so active, so it's exciting a little bit. So on the daily time frame, we're having the Williams come down here after this rejection after the 50 level on the Williams. KD lines and RSI money flow coming down as well below 50. Momentum still could be to the downside. It's definitely not yet over by the looks of it. Let's go ahead and take a look at the 22-hour time frame. 22-hour time frame also getting in that nice position on the Williams, and all the oscillators, money flow, RSI getting wound up for a potential move to the upside at some point. 12-hour time frame also in that nice position with the Williams and the money flow and the RSI. Normally you'd like to wait until the confirmation of the rising sun event, which would take a little bit of rounding out to occur. So we'll watch this develop over the next day or two, perhaps sooner than later. 6-hour time frame has the money flow and the RSI coming into an oversold region alongside the Williams here. Got the leading MACD coming down, which could take some time to come all the way down to the Williams. Let's go ahead and take a look at how things look on the cloud and whatnot. We're extremely outside the Keltner channels. What are the Keltner channels? Well, they're ATR based Bollinger Bands that are slightly more what's the word I'm looking for? They're slightly more sensitive, accurate than Bollinger Bands. When you get beneath them, you come up. When you get above them, you come down. And they're kind of, when you get outside of them, you tend to come back in to the Bollinger Band levels. So let's see how they react to this level at the 6-hour time frame. So this is why I use trend-based fibs. You have this, you hit basically down into the 2 region off of that. All right, so getting a huge sell-off vector candle here. on the monthly time frame, this would have broken everything completely all the way down. And that 27.9, I believe, was also on the 2-year. We talked about that 80 billion, was it 50 or 80 billion? 84 billion at 27.6, but that was on the 2-year. If we went to the 6-month, I think it was, they had a number down below here, 27.9, you had 42 billion, yeah, 42. So the 42 billion has been reclaimed at that region. And yeah, basically that was a nice little move to the downside. Shout out to anyone who was in a short. Now it's time to think about what's next. So once again, the Keltner channel, outside of the Keltner channels here, the baselines are not in the position where you would immediately expect to get in. I mean, there's different play styles. My play style is more conservative. I like to get these cross up confirmations first and then double bottom out. But there are V-shaped possibilities within this liquidity that's screaming retrace now to come up to get some of these guys, these pools of 200 million plus, as opposed to their 100 million counterparts and longs. So at some point they squeeze what they came for and then they start to reverse. This is Thursday midweek reversal, so this could be the squeeze for the attempt to reverse out at some point. They shifted the days a little bit recently. I've been noticing that Tuesday does nothing and then Wednesday, Thursday sometimes act in tandem with one another. So we might have to readjust our thought process on the days of the week. So extremely oversold here. This is why we're getting the rocket ships. And if you see the hourly time frame, baselines cross down still, so the momentum is still not yet settled. You want to see it settle for a few hours and watch the baselines cross up for a potential idea out of there. As you start to go down in the time frames, we'll start to see how that fractal-like nature of everything starts to occur. So we go down to the 15-minute. 3 vectors to the downside here on the 15-minute. All right, so the 15-minute get 3 red vector candles. Williams saying what's up, MACD saying what's up to the Williams. Separation is very intense here. So are we going to start to see a 15-minute play alongside the play to the upside of the ATR of coming out of this Keltner channel? If we go into the 5-minute, you start to see these little bounces and the reclamation idea of the cross down events and the cross up events. We were talking about seeing this potential cross up here. When they had this spike down, we got an alert when it came down to this region and they started to reclaim the cloud, but they did not come above super trend and they did not reclaim the cloud entirely and broke down and crossed back down, and that was your signal to continue the short. So in terms of a reversal here, you'd have to see this reclamation of the cloud or of the baselines and start to see the baselines cross up. Now, what are the baselines? Of course, they're your first sign of reversal, one of the few leading moving average formulas out there to do that. So we got that 7 locked in on the 5-minute. Now, if you had this locked in on a higher time frame, we'll have to see about that. I don't know. It looks like this hourly should have locked in a rocket ship. If it locked in the 7 on the 5 here, then this also would have feasibly locked it in. I don't know why it's not appearing. A moment ago we had 2 rockets, like it looked like it closed here. Sometimes when you populate them, it like depopulates the last one. When it makes the new one, it deletes the old one. So let me go ahead and go back here and just replay this just to make sure that it's populating correctly. yeah, I mean, I guess it got, well, you're seeing it here, but the immediate, when we had the 4-hour closed with that rocket ship there a moment ago. We had 2, so that's kind of strange. Either way, well, we're getting the rocket ship now in the here and now, so does it lock in here is the question. Once again, the last time we had that in Momentum Master was the 25K region in June 15th. You see the timestamp here, and this too, June 15th, Thursday. There's also a midweek reversal day. It was afternoon time, my time that time. This now New York, it's nighttime, 1 a.m. my time. So we had the same thing. It was bright red, once again, bright red. And then everyone was bearish, and that was the that was the swing play. So historically speaking, it was a good, that was a good idea down here. Right in that region was where we got it. Wait, what? Thursday, 1 p.m. That was right there. Boom. Right there. And to the upside. Let's go see, let's inspect it. I want to see, did it lock in on any of the hours here since we're here. Okay, so going to the hourly time frame. So yeah, so this is where it should have been here. I don't know why it's not like the, there we go, it's taking some time. Weird, it didn't lock in for whatever reason on the hourly. That means it has to be on the 15-minute. It's like an elusive rocket ship that didn't want to lock in here. So this is what I mean by the cross-up events. You start to see the cross-up and you see the baselines holding and the cloud thinning, and then you consider pulling the trigger. Like buying this is just hopium right now. So you wait for the baselines to give you the signal alongside these clouds and everything in conjunction as you re-enter the Keltner channel and start to suggest what's going on. And that reclamation of the cloud with the cloud thinning here, that was your clue on the 15. And if we go to the hourly, that was doing the same because everything's fractal in nature. So you had the baseline crossing up, the candles closing above the baseline, some volume stepped in there. You had some bullish divergence on the money flow. You had the rising sun on the Williams. And this is the play. This is the thing you like to see. This is the schematic that's on the website. This is it. That is it. You know, this was 15K. It doesn't matter if it's 15K, 25K, 27K, whatever. You'll see the same thing again and again. And this is the play that I like to see. Now, is that going to play out right now? I don't know. You got to see what the baselines and the rising sun and the bullish divergence and all that stuff do with the baselines and the cloud and whatnot. It's all kind of tied together into a nice little package. And when you see it play out, it's pretty fun because then it does stuff like this. And goes to high heaven. So we were seeing a lot of fake outs with these 7 time frames oversold that didn't really play out, and we were like, I don't really like this level without the what's it called, the knocking out of the longs and whatnot. So they came and they knocked out all the longs. So we're going to see exactly how many longs did they knock out? Let's see, this entire range would be nearly 60 days of longs. So they took out 60 days of longs here. And we're gonna see what it does. So we're sub 28K now. welcome to 27K again, everyone. All right, so we got 40 minutes for the candle close. So once again, like you just saw, the baselines still have yet to come down and scoop it like an ice cream. They want to scoop ice cream, scoop the price action like an ice cream scoop, and then you'll like start to consolidate and make like a double bottom of some kind, and then that's when you tend to come up. So right now we're just seeing, you might see like a V-shaped recovery to grab some of those 100xers and then come back down and then come out of here. So kind of like, I mean, just looking at the liquidity alone on the 1 minute, that's pretty massive. So this basic 27893 character has yet to be taken. They're definitely going to come back for that guy. At the bare minimum, 27893 is like, without a doubt in my mind, is they're coming back for that. Do they muster the strength on the first leg up to come up to 28183 for their partner in crime? There's a lot of 100xers in there. You can see 174 million, 148 million, 96 million, all 100xers, 130 million, all 100xers. So they could come back to that easily, and that's what you would call consider your fair value gap recovery, because as it shifts down, all those lucky campers that get their positions filled and in profit at high leverage, as they reconcile the imbalance, it gives them the justification to come back into these guys. Now it purely depends though if they want to go even lower, because we did talk about this pool down here. Are they going to Bart Simpson down? Is this the time they make the decision to just come grab it all? Anything's possible, right? This is why we use a lot of indicators and metrics to make a decision. And if you look now, it's turning purple on this. You had 4 vector candles and pink. This pink is a stopping volume candle. The stopping volume is meant to stop out the longs one last capitulation before they possibly V-shaped out. And if we go into the 15 minute, so the hourly needs to come down, that baseline needs to come down. The 15 minutes already ahead of you, but it's starting to do that. And so you'll see if there's an entry of some sort of interest, then it starts to bring these baselines in an angle to come scoop it up. If you go down to the 5 minute, you already start to see that occurring. And so you see these baselines coming up, and for a scalp, a 5 minute scalp idea with the 15 minute involved to come back into these 100xers, you could, if you're a risky player, you could try to V-shaped some 100x shorts by taking them out to the super trend and then watch the cloud reaction. So basically, if it comes up to this cloud, then you'll start to see a reaction at the cloud, like a rejection based on how thick this selling volume is. I'd be surprised if we broke up and like reclaimed it and did something like that. That would be surprising to me, but not entirely impossible. I've seen that happen before. But if this isn't just a liquidity grab, but a range that they're going to develop plays off of, then you'll see a rejection off of that, and then you'll come back down for the double bottom idea. But definitely that's why we have the super trend in the cloud here. This is a level that you'd be interested in taking a look at. And it looks like the baselines are holding on the 5 minute, so this is where you start to see the events cascade. Now, if you're just trying to take this up, then you have to be very careful and mind your stop loss into profits and all that fun stuff, so you're not one of these guys that gets liquidated. And it may not be over at all. I know nothing, but that's in the name. So let's go ahead and throw on this liquidation levels too. Like they came down and ate up all those 100xers. They're inducing some more. No shorts interested yet. This doesn't surprisingly doesn't show all of the positions that high block. I guess that's why you get what you pay for, which is nothing, but this actually costs money. So you see there's more positions here than are populating in this. So we're looking for a little bit of a reaction bounce, a V-shaped recovery of sorts to grab some of the 100xers. Rocket goes to the moon. That's right. Surprisingly. And it gave that like nice little 7 alerts to your phone. You got a dynamic alert system here. So you get that 7 time frames oversold or overbought. So if you weren't looking at the charts, you would be, as that rocket appears, like, ooh, snap, it's at the level he was talking about. All right, so that's why we went live a little bit sooner, and we had to call NASDAQ earlier than we hoped. It was kind of going sideways and to the downside, but for the most part. But this is where you like to see it. It kind of scoops it like an ice cream scoop in this kind of 35, 37 degree angle. What is it, 35? Yeah, 37. And then it kind of like holds it. And then if it starts to V-shaped up, then it crosses. And then you see that it holds the baseline. It's almost like the baseline scoops it up. I don't know how it works. I just know how I back tested it the heck out of it until it got to this level. So yeah, it's insane how much time has been put into this thing. But yeah, if you, so the thin one should come up above this. If you start closing out candles above the baseline, it starts to insinuate that it's going higher, and then it crosses this up and you get this DNA helix, which you could also be alerted to your phone, by the way. I think on Momentum Master A, you could just say any of them or cross over only. Yeah, there's multiple alerts you can add. So getting that V-shaped idea inbound as those shorts that opened up into support like that, like this guy, this $251 million guy at 27,893. Yeah, I would be shocked and appalled if they do not come back for this guy. Now, when you start getting up into the 28K reclamation areas, it starts to get iffy on the first leg anyway. Because how many longs will they induce on this first leg up? Oh, there you go, getting a little bit of reaction. So if they induce too many 100xers, then that's what causes the drag, which brings it down again. And then if there's too many, then they go even lower. You know. It's all if-then statements. But this is, yeah, this is as good as criteria check number 1. Was there a huge violent liquidity grab? Yes. 2, are you oversold or overbought on multiple time frames? Yes. Check. 3, are you at some mathematical level that makes sense in terms of a retracement / continuation idea? Yes, we are. Check. We did invalidate the 618, but we are at a 706 level, which was the secondary idea. And so you got those 3 things lined up, and you just it meets certain criteria, and then you have a lot of liquidations being met. You got an imbalance now forming to the other side in the tune of $17 billion imbalance in shorts. So do they come up into that imbalance? Highly probable at this time. So that's what we're going to see occur. Let's go see it. Let's get it. Let's just post it for fun. Okay, so now you got the cross up event. This is kind of interesting. So you're getting the cross up occur now, and this is how it happens. You get the baseline scooping up the price, and this is how you get to see it live in action together. And this happens across all assets. This is what we're doing in NASDAQ futures on the 30-second and the 1 minute. So this is the exact same thing. It doesn't change. It gets more intense with more volume, actually, more accurate. So the thickness of this cloud and this super trend, I'd be surprised if I'll be here for it if we go pierce through and come up to the adaptive. But these are like your lines of defense. You can read about them if you don't know. The adaptive, what is the adaptive? Well, it is a sensitive yet stable moving average which factors out the noise and displays an accurate place where price will experience resistance or return to for support. So if we pierce above the cloud, then most likely you'll fade at the adaptive or this weighted moving average. So this is a conservative outlook to come up to the super trend and most likely reject there. But you know, if you do pierce up above that, then you would most likely reject off of this and then come down to the cloud. At that time, if you're extremely bullish, then the cloud is going to start to curve, and there's multiple times where it does that, where this cloud will then curve and thin out, and then the cloud thins out, and then you get that nice kiss to the cloud and continue. Now this happens on the opposite end of the spectrum too, where you get this thinning here, and then we faded, and then we bearishly retest, and we were just bleeding out from that point. So you try to look for these kiss to the cloud and continue. But as it stands right now, the cloud is extremely thick, so I'm not necessarily sure how well. I've seen them pierce through thick clouds like crazy, so it doesn't always equal that it will reject off the cloud, but conservatively speaking you do. So that's why we're putting that there as a conservative idea, and then looking for that double bottom play. All right, so you got the cross up confirmation. It locked in on the 5 minute. And what do I mean by lock in? Well, this candle closed, causing this to lock in and cross up. So you get the flirtation of a cross up, but then a big red candle causes it to cross back down again. So this is actually locked in, loaded. And just like last time when this crossed down, you had some violence to the downside. When this crosses up, you should have some violence to the upside. So they're coming back for that 100xer. We're going to get it on the live. We're going to get, say, fatality to this guy. Now, I'd love this. Ooh, we did. We did.
Fatality.
And that's what happens to that 100x. Bye. See you. I would love to have this like going like this every day. Not this sideways garbage, but yeah, I would be able to read this live like this and have fun with everyone. Yeah, that would be brilliant. But sadly, Bitcoin has been lackluster as of the last 30 days plus. So yeah, it might be interesting to do that with NASDAQ, but the volume with NASDAQ is quite intense, and I'm still learning it, so I can't feel the same intensity and confidence as I do with Bitcoin here. Calling this little play up to the upside, $200 whoop-de-doo, but it wasn't rocket science that it was going to retrace back into these guys. I was saying, you know, I'd be shocked and appalled if they didn't. So coming up to this at 28, next target 281834, 281834 would put you just above the cloud, so we can put that up there. Right there, let's just say 28.2 even. So do we make it up to the cloud, pierce up above it, maybe even make it up to the adaptive and reject? That'd be cool. Reclaiming 28K. All the shorts are like, I don't believe it. Why? Well, that's why you consider trimming and setting your stop into profit. And so do we come up to the super trend and reject or not? rocket goes to the moon. It does. It surely does. And in case you're wondering, because I see a few new people here, the stochastic array on momentummaster.info, this is what the rocket ship does. It's a never-before-seen formula which monitors over 7 time frames of information and 32 different indicator values, giving you that rocket ship love. We were waiting for it. It's been a while since we've seen him. Once again, the last time we saw that guy was back in the June 15th at 25K. And after that we zoomed up. So it's the first clue, but it's only locking in on this 5 minute. How long does it stay here? I'd love to have seen this lock in on like a 6 hour or something. A 6 hour rocket really gives, but I guess that's only like market reversal levels. That's what happened in December. So we got an hour and 24 minutes for this 6 hour. If this turns into like a big buyback wick and closes there, boom, that's a pretty decent thing. If it does that, that's pretty bullish if it does that. 4 hour candle close kind of bearish here at the 618, was it? No, it was a 6.5. So it closed at the 6.6 level, and we wicked down to the 7.06. So because of all the other the commonality of the 618 nowadays, everyone was most likely waiting for that. So they decided to retrace deeper into the 706 region. So the 4 hour is going to take some time to come down and scoop it like we just saw on the 5 minute. So what you saw on the 5 minute will occur, if it occurs on the 4 hour, it will do the same thing. It will come down and scoop it, and by that time you will have seen your, your double bottom idea, and then that's when you can kind of see this scooping. Like you would see this baseline come down here and scoop up the price, and then you'd be like, okay, and shoot, if you were so inclined. You'd have to see other time frames and cloud health and everything. Go back and, if you have the Momentum Master Suite, look at the last time the rocket occurred at 25K, things like that, and see how the structure develops. I mean, the entire schematic is here. This is the sauce. This is the thing. You get that shoulder, head, and shoulder out, but you don't even know the shoulder's coming yet, but you have basically, double bottom after double bottom and rocket ship, but you even had a liquidity grab thereafter. So the rocket ship wasn't the exact bottom, but it was insinuating something's coming, and that was 15K, and sure enough, it did. I've back tested this so many times. It's what we're waiting for. We're starting to get some volume here. Green, that pink, that stopping volume. That's what the pink insinuates. We had this pink saying it was pink at the beginning of the stream because it was a stopping volume, now turning into a green vector. So the interest is generating to the upside here as we retrace into these pools. So we could very well make it up to his partner in crime, the 50X, at 28,183. Other partners in crime here, 100Xer, 96 million and 148 million in confluence stacked in this region. There is a large long opening up here to the tune of 86 million. So they could come back to them at some point too, as they need to, for bullish order blocks, as whatever you want to call it. It's the same, they're the same concepts reiterated. So we've reclaimed this, and then the fair value gap, quote unquote, would be up here at 28,334 on the hourly. So if you come back to that, that could be cool. And let's go back to the 5 minute just to see how things are doing with that cross up idea. So this is how you see it. You see that candle close above the baseline, and boom, you could fire the trigger. I had some nice members in Momentum Master doing the 2 minute, and they would play these 2 minute cross ups and take them to to Valhalla and beyond, and just wait for they would use it in 𝗥𝗲𝗃𝗃. And the 𝗥𝗲𝗃𝗃 formula would give you some special sauce for when this indecision appears and it's above the baselines after this cross up event, and boom, you could take it and it would get you in sooner. So you get this cross down event and boom, you could just play crossover pong. Cross down, cross up, cross down, cross up. Beep, 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 beep. And you could be doing this. So we're reclaiming it, the adaptive on the 2 minute and the cloud on the 2 minute. We canceled the super trend of the bearish on the 2 minute, so it all starts fractal even from the 2 minute on up. Don't need patterns, you could just use momentum. Patterns are tertiary to momentum. Let me repeat that. Patterns are tertiary to momentum and liquidity. There's three things. You have liquidity, momentum, and the math. That's the three things you need. The patterns will arise from those three. So a pattern trader needs to study the liquidity alongside the momentum, not just momentum alone will not take you there. You need momentum, liquidity, and math on your side, and then the patterns will rise, and then you'll be able to say, oh, is this a shoulder head and then a possible shoulder out? Like all of that stuff arises from these liquidity grabs. So if you don't know what the liquidity is doing, you don't really have a grasp of what's actually going on. You're just guessing. So yeah, this $251 million character is like highly interesting right now. 28,183. 242 million 100x are at 28,344. Just watching how many longs open up here. Shout out to everyone here. Boom, boom, boom. Cross up event. Our little rocket ship's turned off. What happened to the rocket? Let's turn on the candles. See, I don't get why that happens. It's like when I switch between stuff, sometimes it like disappears, but it was there. It was locked in, loaded on that candle for 2 candles. So where did it go? It's weird. Like, I'll have to look into why that, like, there's something in the code, not to you know, be nerdy about it, but there's something in the code when you populate the next rocket, delete the one prior, and then if there's something conflicting, it'll delete too many of them, and then it'll just disappear. So I need to look at the replay mode, but you saw it either way. It did appear. And the same thing with this one. It did appear, but it didn't lock in. But I posted it as it appeared on my phone, and it played out nonetheless. So I posted this as it appeared, and will it play out nonetheless? I don't know. Only those privy with Momentum Master know the answer to that. But these are the type of, that's why I knew this was like a swing level. If it got all the way down to this level, it would have been juicy. So can we're coming back. So let's just zoom out a little bit. We're getting myopic here. Let's like take a zoom out here. So we got to on the bearish trend-based fib level, we came all the way down nearly to the 2 level, basically the 7806 bounce idea here on the impulse to the upside here, on this impulse to the upside, and we basically cleared this entire bearish trend-based fib. So it's pretty much over, although you'll probably meet with some resistance on these levels on the way up. So I'll just leave it here for the time being, but it played out. This idea of the ABC is now complete, and this point of control no longer necessary, so I'll delete that. This guy is long since in profit and likely closed, so I'll delete that too. This level we'll reassess when we get there, but those are some pools that we are looking at for potential longs, and we're getting some V-shaped here above 28K. So in the next hour and 15, watch the 6 hour. How does the 6 hour close? Is it going to buy back wick up and close strong? Or is it going to close with this really lackluster bearish engulfing type vibe with just a slight wick? So it depends on how thick the interest is generated to bounce off this V-shaped. And that doesn't mean it won't come lower after that, for we talked about that double bottom idea. So this is just the first one, but if the initial impulse to close that candle is not strong, then there's not so many people stepping up to the plate here, and they could, or letting longs out of their trades here. So that means they might insinuate going lower at that time. So the 15-minute also, like if we look at this in conjunction with Momentum Master B now, because we haven't been looking at B as much. So you see this rising sun event potential with the MACD in the realm, the domain of the Williams with the rising sun here, and you're starting to get the scoop on the 15 perhaps. So the 15-minute, does that 5-minute cascade to the 15-minute? We saw the 5-minute play out for what it's worth. Now does it cascade upwards into the 15-minute? You have this little scooping of the price action. Can this candle close in the next 13 minutes to close out the hourly strong? If it does that, this baseline is going to start to come to cross above this next baseline, and then you're going to see this golden light of the Williams, this also in conjunction with that, meaning it's in a good back testable zone, which when it crosses the average of itself here alongside this, it's generally good for a bounce. Now when those fake out and you get bearish divergence like you did here on the money flow, and then it drops down, then that's not obviously the best time to consider it. But you look at it in confluence with everything, and they're just monitors, right? If then statements. If it does this in conjunction with this, then it's good to continue. If we look at that on the 5-minute, we'll have seen that already played out. So now it's up to the 15-minute to cascade it. And see, we're meeting with resistance on that cloud we were talking about. We talked about coming up to the cloud and rejecting. So we said we'd come up to this cloud perhaps and reject, and then come back down, and then look for that idea. So that we didn't even pierce the cloud or the super trend at all. We just came and took out that guy at where was it? This one at 27,893, and we have yet to come up to the 28.93 level or the 28.183 level. So they also try to induce some shorts here. So by dropping, they're like, how many of you are still interested? And they can use them to fund the journey up to squeeze that guy. So it's all about inducement, and then they induce this guy in, so they might just go back and grab that 100 extra, say, nah, we're not paying you right now. This guy's a lucky camper down at 27. His liquidation's at 27,588, but they opened at 27.74, so they got that exact bottom. That was a smart pool open right there. And so it goes back to test the baseline on the top baseline of the 5-minute, which would also be on the 15. It's the small baseline. And so you watch to see how these close, and it's just an observation. If you're in the trade, you're just wondering, is it going to play out? What's going on? And so this helps you measure the momentum, hence Momentum Master. Momentum, liquidity, and math. Those are the 3 tools you need. Patterns come after, and they're more elementary in my mind. The patterns are tertiary. It's after the fact. You cannot preempt a pattern, but you can preempt the moment. Based off momentum and liquidity, you can preempt the shift. So does this 15-minute meander around and go sideways? Where's the interest being generated right now? Flirting around 28K. trying to go down. Oh, they generated a $57 million 100x short with that. Was that an inducement? If they spike back up, they just got that guy to open a short there, and they could just be like, oh, thank you. Now we can justify leaving that guy alone. We'll come for you now on the process to come for this guy. And so they start to induce one side and the other, and if that side can offset the 86 million by their 57 million, so now he's only a $30 million pool, so they're like, okay, now that $30 million we can justify to get this 250. And that's basically, they juxtapose the inducement that they're having, and it's never static. It's a dynamic, moving, undulating beast. And the more liquidity on one side, the imbalance on one over the other starts to justify the move to the other side. Very fascinating. It's like a living, breathing liquidity monster. And this still could be the one leg up. You know, I'm just showing you on this fractal-like nature of how it comes back. And then how the 2-minute kind of reacts here, it's kind of thinning its own cloud, this volume-based cloud, kind of showing that the selling interest is waning, and you're getting this like potential kiss of the cloud on the 2-minute. So the 2-minute could be doing like a little ABC to the upside, and this could still be the single leg up. And so you could even just like on a very small fractal level, just do a fib, and then you'd be like, okay, well, if this math says we get above 28.16 here and we hold this, then you could be seeing higher prices at that point. So I took that trend-based fib level, and then if you get above that 236 somehow, and if you go lower, you just adjust that. It just tells you the if-then. So wherever this bottom is, if we're going to continue higher, like let's say it goes down to that super trend, then it changes to if you get above 27,982 at that point, then you can consider continuation. And that's how you would scalp it. That's how I scalp the NASDAQ with a bunch of the other people within the Momentum Master Discord. Speaking of NASDAQ, while we look at that, what happened with NASDAQ? Let's go to NASDAQ now. So NASDAQ got the shift out. We were talking about a 706 reaction off of that as well, and they got the shift, kiss to the cloud, boom, and they started to make their reversal. And you see the cloud shift here, getting that reversal out of that region of the 706 retrace. They did a deep retrace down into the 886. They got that double bottom action going. But whoever was watching that would have seen the shift, seen that kiss to the cloud, and boom, taking that for some massive gains most likely. So we're getting that failure possibly coming down for the double bottom entirely. So this is, if you get that if it retraces more than the 618 like into a deep retrace, it's not that bullish, so you don't even need to think about it that way. And then you're getting the cross down event. So this cross down event not to be ignored on the 2-minute. And let's go see what the liquidity is being induced. Did they go down to that character or not? They're really close, so they're going for that $86 million guy at 27,872. 27,872 is going to get reclaimed by the looks of it, and we'll see that guy get gobbled up on the live. 100xers, man. 100xers need to pay themselves quick. They don't hesitate to come back for these guys. And we got 5 minutes for the hourly candle close as well. $27,872. So that's what I mean by the cloud is thick. It doesn't have the momentum to pierce through it. I mean, I've seen it happen before when the volatility was higher. They were wick-whacking through stuff. I'll show you an example of that too. Let's go back in time while we wait. Over here. I believe it was here. Yeah. Wait, where is this? That's August. Sorry, the price action bleeds together sometimes. Over here. June. Maybe this one? Yeah. So it was back in June, I think. But the cloud was pretty thick, and I think it was thick on some other time frames. But you see how it comes here, it kissed the cloud and it was gone. Let's go to a lower time frame, like the 15-minute. Here it started to reclaim and meander around on the 15-minute, insinuating that it was ready to cascade to the next time frame. And the next time frame went to the hourly, and the cloud was thick here, and then it burst right through. But it was at a stop loss hunt, and it went up and it came down because it hit the all-time high, well, the range high rather, and then came back down through that. So this thickness, it didn't do its normal but on this next hour closing up above it was interesting to note that it did pierce above the cloud. But this is one of those instances where it breaks above a thick cloud with a fury without following that idea. But if you got in with this buyback of this candle above the baseline here, you could have taken it to see what it was worth. And that's how it works. That's how the sweet keeps you out of like lower probability and more into the higher probability. So these baselines need to come down more, and the only way to do that is through hours closing. So throughout time, as this 3 minutes in this hourly close, does it close, this will bring this down a little bit more, and then we'll be one step closer to that reality. 15-minute is trying to hold these baselines with the insinuation of that baton pass from the 5-minute. The 5-minute did its thing. Now it's the 15 minutes turn. And that's how the 5-minute passes the baton, like in a relay, to the 15-minute. Shout out if you're set through this entire thing. This is a little lesson on how momentum works and the cascading of momentum throughout time. You're outside the Keltner channel, so what it likes to do is come back. It's in unknown territory. Imagine, my friend and I were talking about this like a snake eating liquidity, an eating liquidity snake, or dragon as my image in my profile shows. So it comes outside the range, but this is the known, this is the unknown, it's the nothing. So it likes to come back into where it's known in the channel. So it goes outside of the channel to come back into the channel, and it can only stay out of the channel for so long before coming back in, and it can bring the channel down to it. So sideways is a way of doing that. But for the most part, when you go above the channel, you come back into it, and then you come beneath the channel and you come back into it. So we're currently outside the Keltner channel on a lot of time frames, not just the 15-minute, but 41 seconds for that 15-minute and hourly close. Let's see how the hourly closes. We can measure this objectively. It is a spinning top doji, if you will. If we do a retracement from wick to wick and then turn this to the basic, it is not above the 382, so this is not a bull hammer. This is a spinning top, and that's the definite objective measurement, is if the body is above the 382, which it is not. But still, possible tweezer bottom idea. And see how it brought the baselines down a little bit more? Boom. And so now you're one step closer to that cascading event. And so the hourly closed, the baton passed, the baselines are still holding on the 5 minute, so you could be getting this, you know, continuation idea as it cascades to the 15 minute, getting exact same thing the 5 minute did. It scoops it up, and then you watch to see if this candle kind of comes up, and you get the 5 time frames oversold. Now it's 5 time frames because the 5 minute is no longer in the same boat. 15 minute also coming up here, getting overbought above the 50. So it's doing all these calculations for you, so you don't need to necessarily be looking like a madman between different time frames. I still do it anyway because I'm crazy, but yeah, especially if you're not looking, or you're at work on your phone, you can just see, you get that message to your phone like, oh, now it's 5 time frames, it's holding that level. Interesting. 5 minute must have done its thing. And so if you're at work, at a meeting, whatever, it keeps you in the loop, so you don't have to have 5 monitors open. So the 1 hour is coming back down here. It's going to be a couple hours before this scoops it up in a manner here, and then you could see that kind of cascade to the hourly or not. 4 hour time frame also has a long way to go, as you see here. The baseline's still open and to the downside, so for a 4 hour play it would take some time. You do have times where it just ignores the 4 hour, but there's times where it develops and you see that building before it shoots up. If it's a longer play, it'll take, you know, days, because each one of those is 4 hours, right? So that's a weekend for that to occur. Same here, you had the cross-up event and it took some days for that to occur, and it cascaded and held the cloud and went up even higher. So it depends on your patience level. Are you trading the 4 hour, or are you just going to scalp the 5 minute like we just did on the live? It's all about your type of trade and your type of personality and your withstanding of position. How long can you hold it? Can you hold it in the red, or you know, what type of leverage are you using? It's all, that's not my cup of tea to instruct you on. So looking at the 5 minute here, do we pierce up above this super trend? That would be the next move in the process. So since it did close the candle there, we can go back to that fib idea and take it from, let's just take it from the absolute bottom to the absolute top of this little impulse. And then so if you can get above 27,979 here, then you could stand to go higher. A reasonable target would be the 1 level at 28,275. That would also put you at a vector. If you just take this retrace level of this entire candle and then you do equilibrium, that will put you at the 50% level of that vector, would be 28,222, let's say. 50% recovery of this would be up there. So it would not be unreasonable to think that we could go in that region. And you got your little Tino N going on. Shout out to Traders Reality, because all systems are a go if you stick to them long enough. His cloud is an EMA cloud. Mine is a volume weighted cloud with Heikiashi formula, so it gets thicker and thin, more sensitive than his. I do adopt his PVSRA strategy. It's quite nice. It's not his either, he adopted it too. There's nothing wrong with adopting strategies, I think, if they work. It's when you claim them as your own when they're not your own. This, I can safely say, is mine, the stochastic array formula that was a pain and a half to make. And the baselines in conjunction with the cloud are a unique feature of Momentum Master, I think. So we're back in the Keltner channel on the 5. We got out of the unknown into the known again. So the 5-minute is relaxing here. Does the 15-minute want to get that aggression push back into the Keltner channel that it's currently out of? The cloud is still thick here, and it happens to be at the same region. So even if you don't know Fibonacci and you don't know the math so clearly, Momentum Master will give you that super trend level of where it's likely to reject, if it will reject, if this trend will continue. Like on the 15-minute, this super trend has been holding since Thursday, the beginning of Thursday, basically. So it's been going all the way and never reached above super trend. So there is no bullishness until you can get above that level, which is about 1.3% from now, which would be up in the regions of 28,336. So until you can get above that, there's really just a scalp idea in mind, or a first leg before we drop back down of these reclamations of these shorts, these 100x and 50x over leveraged people. Just keep that in mind. Or if you can withstand the second leg down and you're fine with that, then that's up to you. We reclaim 28K now. Fun to watch. I got an early morning tomorrow, so we did reclaim 236, and this 236 of continuing to the upside here. The 15-minute baseline's getting close together in the next 8 minutes. If you close above this 236 and these cross up, you could be seeing that 15-minute cascade, and that gives you a little bit more fidelity than if you're a stochastic only trader. You're just seeing this ambiguousness, wondering what's going on. I just gave you a little bit more fidelity to the image with these baselines and the 236 and the cloud and the super trend. Hopefully it gave you a little bit more insight into momentum trading and how that works. So that's what we're looking for. And that cascade, you saw the rocket here, is that insinuating something for a swing trade? I don't know. Last time it did. So we're here for it either way, and we are glad you tuned in. So we'll leave you at that. We'll see how this turns out over the next 2 hours or so, and we'll keep you posted with the liquidity as it stands. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you